This is Scott Pulsini with Strategy.part1, and we're going to go over the setup GAP-VWAP fail. First, I have to read this disclaimer. We are not financial advisors or a broker-dealer. Neither Trader.com nor any of its officers, employees, representative agents, or independent contractors are, in such capacities, licensed financial advisors, registered investment advisors, or registered broker-dealers. Scott Trader does not provide investment or financial advice or make investment recommendations, nor is in the business of transacting trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation. Nothing contained in this communication constitutes solicitation, recommendation, promotion, endorsement, or offer by Trader.com of any particular security, transaction, or investment. Securities used as examples. The security used in these examples are used for illustrative purposes only. Trader.com is not recommending that you buy or sell the security. Past performance shown in examples may not be indicative of future performance. Return on investment examples. The securities used in these examples are for illustrative purposes only. The calculation used to determine the return on investment (ROI) does not include the number of trades, commissions, or any other factors used to determine ROI. The ROI calculation measures the profitability of investment, and as such, there are alternative methods to calculate and express it. All information provided are for educational purposes only and does not imply, express, or guarantee future returns. Past performance shown in examples may not be indicative of future performance. Investing risk. Trading securities can involve high risk and loss of any funds invested. Investment information provided may not be appropriate for all investors and is provided without respect to the individual investor financial sophistication, financial situation, investing time horizon, or risk tolerance. This material may not be reproduced or distributed in whole or in part without prior written permission of Trader.com. Any other reproduction or distribution in whatever form and by whatever media is expressly prohibited without the prior written consent of Trader.com. So this setup, the GAP-VWAP fail. This trade focuses on stocks that gap up or down at the open and fail to hold the VWAP in the direction of the gap once moving to the other side. If stocks are truly strong or weak in the direction of the gap, they should not be able to stay on the other side of VWAP for long. Once stocks get to the opposite gap side of VWAP, there typically is a cover enough position as many traders lean on VWAP for their stop level. Price has to stay on the opposite side of VWAP for at least 15 minutes to take this trade and must have heavy resting liquidity come in near VWAP to lean on with a stop just below the liquidity level. I usually give this trade at least 2 attempts, and if I get stopped out on the first attempt and the market moves swiftly back against the opposite side of VWAP again. So I'll show you some examples here. So the whole idea of this trade is that, again, if a market gaps in a direction on the open, then it should never be getting above or below VWAP in the opposite direction of the gap if the gap is legitimate, right? Especially with these big funds and these other players playing the VWAP, waiting for it to return. If the gap is legitimate, they should never be able to get above or below and hold the VWAP. So that's the whole philosophy with this trade. So when you use the bar charts to gauge that, and then you use the liquidity from Bookmap to confirm your areas and lean on those areas for excellent risk reward. So our first example is MCK. This was on 10/21/19. MCK gap $2 lower on pre-market negative news and moved another $4 lower at the market open. I saw a 15-minute hold above VWAP, which is opposite of the gap down, and I moved back to VWAP from where there was the heavy resting bid liquidity at 146.30. I bought once I saw buyers come in at 146.59 and risked the trade down to 146.20. Market moved swiftly to the high volume node of the balance area it broke down from, where MCK failed at the first heavy liquidity, where buyers failed to push through and exited the remaining position on the second attempt at the high, where heavy buying stalled and heavy offer liquidity came in at 152.60 to 80. This trade was risking 39 cents to make $6. So this was the trade. So you can see here, this is the 30-minute bar chart, but this was the area, the balance area that it broke down from. Gap down. Here's the gap. And then, so the market sold off hard in the beginning of the morning, and then around 10 o'clock, this is Mountain Standard Time, it got above VWAP and held above VWAP. So this is a 2-minute chart. This is a 5-minute chart. I just have the annotation here that it is holding above VWAP for 15 minutes. And then what it looked like on BookMap is it moved above, and then when it came back down, this was the hold above, and then it came back over here where the resting liquidity started to add on right at VWAP, which is right here. So when I saw that resting liquidity, and I don't have this on this chart, but when the buying initiated because of this liquidity, that's where I got in. So I got in, right around here, risking. I got it right around 146. I think it was 146.50ish, and then I was risking down to 146.25. So again, if it can't hold above this liquidity and VWAP, which were confluent, then I'm out of the trade. If it would have broken through, got back above, I would have tried it one more time, because many times you'll see a flush through VWAP, because these algorithms or these funds know that a lot of traders lean on VWAP, and they know they can run the stops, and then it turns around and goes. So I'll give it 2 different attempts, for the trade. So this was this is what happened after I entered. So this was the VWAP trade here. Obviously this is condensed now because of just to show this ridiculous move, but when it the move to happen actually happened here. So I was in over here and kind of just balanced for a little bit, and then again, this is a 2-minute chart, so it balanced here above VWAP, which again is another good sign, and it just kept bouncing off the liquidity, and then it just rips. This particular instance was news driven, but it doesn't matter. I was in the trade, and I got lucky with this quick of a move, but a lot of these moves will end up going $5, $6, $7, especially depending on what the average true range is for the stock. So you can look that up on your own. But again, I'm playing more off the liquidity levels, and I was looking for, if I was right on this trade, I was looking for a stall in the high volume node of this balance area. So the high volume node again is where most of the trade transacted, which is right around here, basically the middle of this. It came up, tried to rip through, put in a selling tail, and then when it came back up here, I was out. So I'll show you. Again, this doesn't show the whole story. You need the book map to see where you need to exit, which I'll show you here. So this is the area I got long down here. It just blew through all of this liquidity immediately. I knew I was sitting pretty at this point, and then just ripped. Sellers try to engage here, no dice. I mean, it's great that they're trying to sell, but unless the market starts to pull back, you have no worries. You just hold on until you can see an actual pullback. So the buyers, so basically these guys that try to sell, you can tell they just turn around and puked it out, and then ripped through here, kind of stalled here. And when I saw it get up to this liquidity that had been resting for a long time, which was obviously a lot heavier than this one, I saw the buyers engage. Again, I would have held it even higher if it could have got above, but then the sellers came in, so I exited half the position. I just wanted to see what it did, when it returned down to this area, and lo and behold, it returns down right to the area the guys tried to sell initially. So whoever's still remaining that held their breath, they got lucky. It came back, they got out of their position, and then it moved back up here. So once it moved back to this area, I was originally focusing on this area, but now I see this huge buying, which is equivalent to some of these buyers, and then just not even a budge in this liquidity, and it actually refreshed. And so the minute I gave it a shot. If it could have gotten through here, I would have definitely held it and put my stop here. But they tried to buy it here. The sellers came in. I was out. So again, I was risking. I risked 39 cents at the time to make $6 on this trade. So the next example is AXSM. This happened on 12/16/19. The bigger picture relative fundamental news was AXAM gapped higher on positive phase 3 depression results. Saw close to a 15-minute hold above VWAP and shorted when I saw a heavy offer lit come in at 80.20 and $80. Sold when it bounced off of liquidity, and liquidity actually increased, and I saw aggressive selling start to come in. Watched it rip down $7 through multiple liquidity levels, and covered once I saw selling fail near 74, and then aggressive buyers pushed it through the last liquidity level and moved through on the way down. I risked 70 cents on this trade to make $6. So you can see here, again, this was a huge gap up on the positive news, depression results. And again, if this gap is legitimate, this should not trade below VWAP. I mean, this thing opened up and it was immediately below VWAP. And this is an excellent confluent sign when you see this extremely heavy volume on this sell bar. This could be a signal in itself. You see a sell bar and then it move back to the middle of the bar. If you see any liquidity in Bookmap, you can short it. But now this is confluent with VWAP as well. So when it moves back to VWAP, short it. And then, so this is what it looked like. So this was that move up. It ripped down through that. This was that heavy bar here. Actually, this was the heavy bar here when it moved back up to here. 738. I just want to make sure I got this correct. Yeah, so it was right here, right above 80. So this is where VWAP tried to pull back up, failed, came down here. I'm sorry, I don't have this part of the chart right here, but that's not important for this example. Liquidity was here and liquidity was here when I saw it come back to VWAP, which was this here, this area here, this time period here. I saw this liquidity here and I saw this liquidity at 80. So this was just above, this was right at VWAP and this is right below. So again, a lot of times it's not going to get exactly to VWAP. I mean, where the liquidity is, but if you see liquidity at VWAP and then you see more liquidity come in, now you have two different layers of liquidity that you can lean on. So again, you could aggressively get short here, but I like to see these buyers fail because a lot of times this thing will just go buy right through all this, right? So I want to see them try to buy it. I want to see this liquidity refresh. Then when I see the sellers, now I'm in, right? So I got in right around 79.60. I'm risking up to about 80.30-ish, right here above. Again, if it blows through both those liquidity levels, I don't want any part of this trade, right? I'm wrong. And you get out, you lose your 60 cents, and you move on to your next opportunity. So on this one, it actually sold off and then just absolutely ripped down. So this was where I got short, ripped down. This was